China hiking its tariffs on U.S. imported goods to 125%. Beijing planning to file another lawsuit with the World Trade Organization against the U.S. Duties. Let's get more now from Yun Sung, Senior Fellow and Co-Director of the East Asia Program and Director of the China Program at the Stimson Center. Thank you very much indeed for joining us.
Thank you for having me.
Beijing, China is a superpower, and your feeling is that they, above all, don't want to be seen to be negotiating from a position of weakness.
That is correct. They just got back from China this morning. And also, I think the Chinese do not believe that they are in a position of weakness. They feel that over the past 8 years, they have built up the internal circulation of the Chinese economy, becoming less dependent on the U.S. market, and are also more reliant, more self-reliant on their own technology. So every way they look at it, compared to 8 years ago, they feel that they're better prepared. So the level of confidence to counter and retaliate against what Trump administration is willing to impose on China is actually surprisingly high.
That's interesting. Yeah, because of course we might think, oh, China's a source of cheap stuff you buy in the dollar store, but that's way out of date now.
The Chinese have been trying to upgrade themselves on the global supply chain, right? So the low-end, the labor-intensive manufacturing industry, a lot of that has been moving out of China because of the increasing labor cost in the Chinese market. So we're looking at, for example, Southeast Asian countries, Malaysia, Vietnam, Thailand, you name it. These are becoming very convenient backdoors for Chinese traders to access the U.S. market. So we're looking at the Chinese trying to become the high-tech leader in the global supply chain. But in that process, I think they still face some fundamental obstacles because of their, for example, they still have to rely on the global market for the most high-end semiconductor chips. So the Chinese are working on the internal resilience and working on their own high-tech industry. But at the same time, I think they feel quite comfortable about where they are currently.
You mentioned chips, of course. Taiwan is the world's dominant manufacturing location for chips. Does China have access to those chips, broadly speaking?
I think it does, but it's also, it needs to be qualified. It's not a black or white answer. It's not, yes, they have access. They have access to some, but they definitely don't have access to all. And I think this is quite clear from the trade data, for example, from 2024, Taiwan, Japan, and South Korea are the three actors with three players that actually run a trade surplus vis-a-vis China in 2024. And remember, 2024 was a year when China had a $1 trillion trade surplus against the whole world. So among that trade, against that trade background, Taiwan still had a trade surplus vis-a-vis China. And that trade surplus primarily came from semiconductors and other high-tech products.
So we've heard quite a lot about relatively moribund growth in China, sir. And I mean, that's going to happen, isn't it? As the economy becomes so huge, the law of large numbers kicks in. And we've heard about property problems, people, consumers way underweight on apartments they bought, for example. So I know it's a ridiculously glib question, but how is the Chinese economy doing overall? I mean, is there popular discontent with standards of living?
The economy has been slowing down. The economic growth is not as where it was, let's say 20 years ago, or even 15 years ago, or even 10 years ago. So the economic growth rate has been slowing down basically since Xi Jinping took over. And I think average people, the general public in China, the most acute impact on them is the loss of jobs. And this is the direct result of the COVID quarantine or the self-imposed isolation from the COVID period, and I would say that recovery from the COVID economy has not been fully recovering to the pre-COVID state. And on top of that, we're looking at, well, Chinese domestic economic problems. There is the local government debt problem. There is a real estate market problem. There's also, I would say, for average people, the most acute issue is unemployment, because for example, with the additional U.S. tariff being imposed on Chinese export products, what it directly means is that China's export industry is going to take a significant hit. Some of the Chinese economists did the calculation yesterday that if U.S. completely cut Chinese export to the U.S. market, the impact on the China's GDP is going to be 2 to 3% at the minimum.
Whoa.
And that inevitably is going to reflect on average people's perception about their economic future. Well, having said that, I think for the Chinese government and for Beijing, for the Chinese leader, the key question is, what alternative do we have? So we are faced in this. We're faced with this escalation of tariff with the Trump administration. But is there a way out? That is there a negotiation that we can have that actually will reduce some of this tariff pressure on China? And I think that's one issue or one question that the Chinese have not figured out the answers to, because for them, if Trump administration's goal is to bring manufacturing jobs back to the United States, that means their ability to reduce tariff is going to be intrinsically limited because, in order to make the U.S. manufacturing industry more competitive, they will need the tariffs to be in place. So I think without some clarification as for what U.S. eventual goal is in this escalation of the tariff, I don't think the Chinese will be very easily offering to negotiate because they don't know what they're negotiating about.
Yeah. And I mean, on the surface, this plan to have factories all over America seems deluded. I mean, the factories left the US for a reason. They weren't competitive. So, yeah. Listen, I could talk to you all day. Yun Sun, thank you.